Kevin Lee, President of the Professional Young Insurance Brokers, or PYIB. I'm also President of Fuse Insurance Limited, a commercial insurance brokerage based in Calgary with operations in BC, Alberta, and Saskatchewan. I'm here today to do a short presentation on the new cannabis insurance market, an emerging industry within the commercial insurance world of Canada. As many people know, Canada legalized cannabis back in October of 2018. Cannabis has been rolled out in two stages. The first is traditional cannabis products like dried flower and other direct cannabis leaf products. Now, with the advent of what is known as Cannabis 2.0, released in October 2019, we are seeing more varieties of products, including edibles, as well as concentrates, topicals, and other products that are popular amongst the market. On top of the traditional known effects of cannabis, including potential intoxication, there are also challenges around health concerns, especially with regards to vaping, and there are concerns around people operating machinery or driving a motor vehicle, as well as general business concerns, including the traditional fires, crop exposure, water damage, slip and falls, and other insurance items common to most types of business. In order to address that, the insurance market within Canada has responded with a number of insurance products. These include commercial property, commercial liability, product recall, products liability, crop protection, course of construction, commercial auto, cyber insurance, directors and officers insurance, errors and omissions insurance, and a number of other types. As you may guess, based on the sheer variety of insurance products offered, the commonalities between cannabis-related businesses and non-cannabis businesses are quite similar. For example, businesses with heavy foot traffic, like a retail store, may have a higher slip and fall exposure than a growing facility that only has a couple of employees. Conversely, a processing facility that uses complex chemicals, including butane and other flammable goods, in order to process cannabis for use later on in edibles and other extract-based products, may have a higher fire exposure due to the chemicals that are present on site. Underwriters in the cannabis industry have taken a very cautious approach in terms of underwriting cannabis. There are typically only 4 to 5 insurance companies providing coverage within the main P&C or property and casualty space, with others shoring up as needed within the cargo standpoint or directors and officers and other specialty coverages. Cannabis insurance is determined by a number of factors. Apart from traditional risk exposures like property values and revenues, there are also certain minimums that those in the insurance industry should be aware of. These minimums are primarily driven through government regulation and vary from province to province. Cannabis growers are only able to sell to other cannabis growers or to provincially licensed regulatory boards. These include the AGLC in Alberta and the Ontario Cannabis Control Board in Ontario. Within Alberta, for the AGLC, all they require to sell the cannabis product, apart from being fully licensed with Health Canada, is a $10 million commercial general liability or CGL policy. This is not necessarily the case in other provinces, whereas for example, in Ontario, in order to sell to the government, not only do you need to have the commercial liability coverage in place, you also need a $15 million product insurance program. This cost can be significant for smaller cannabis producers, and so brokers who are advising cannabis-related clients should take into account the effects of different provincial regulations across the country.